Today's this is part 2 of how to become an intelligent Elliott wave trader. How to become an intelligent Elliott wave trader, part 2. I recommend to traders to watch the first part of the tutorial so they may understand what we are talking about. On the first part, just to refresh a trader's memory, we were talking about admitting errors and rectifying those errors, and never repeat the same mistake. Pay attention to other Elliott wave traders or other technical traders. Review past wave counts. Use the Elliott wave as the Elliott wave theory as a tool instead of a sign. Combine the Elliott wave theory with other technical tools, technical indicators like the volume bar, like the Fibonacci, or like the predictive fractal. Never use Elliott wave by itself alone. Use it in conjunction with other technical tools. And we talk about the electronic arts. We were talking about mastering the theory first. All right, very, very important, because if one does not assimilate or duplicate the knowledge, one is not able to apply it. So the first step is to accumulate the knowledge first, understand the Elliott wave theory thoroughly before one can attempt to put it into use. Though this is the problem for other traders, there is another group of traders that have already mastered the Elliott wave theory, but they are using it as a sign instead of a tool, and they get into trouble. So those were the things that we were talking about in the first part of this series of video, how to become an intelligent Elliott wave trader, part 1. So in part 2, I want to bring something up. So we were here analyzing the electronic art, and we were counting wave, talking about all sorts of things, the alternance between the second wave and the fourth wave, and also we were talking about forecasting the fifth wave. When the fourth wave is prolonged and we see a surge in trading volume, we can expect that the fifth wave is likely to go up. One thing I was banging on in part 1 was that one should never think that is guaranteed, is exactly what's going to happen. That always one should think that there's a high chance, think of probability. All right. So in part 2, which is very, very important for some traders, because some traders have been counting wave on the hourly time frame. Trader ask me, count wave on the 3-minute time frame, count wave on the 15-minute time frame, count wave on the 30-minute time frame, on the daily chart, and so on. Right? But we can count Elliott wave on any time frame, even on a 10-second time frame. But when we are counting wave on any time frame, don't forget the higher degree wave count. Some trader will say to me, George, I already know this. You talked about it before. Why are you talking about it again? We are talking about it again because this is the challenge for some traders. Sometimes one will know something, I talked about it before, but one will never put into use. You know it, right? Or maybe you have a tool in your room, but you never use it. So what we are trying to do now in part 2 is to make sure that traders are using it. So what's the point of this video? The point of the video that when we are analyzing electronic art, we were on a monthly chart. That's where we start. We talk about the first wave, the second wave, the third wave being extended up to this point, the fourth wave, a complex fourth wave and deep, and now we are now in the fifth wave. We are expecting the fifth minor wave of the fifth wave itself, an extended fifth wave. But all this we were doing them on the monthly chart. So in order to become an intelligent Elliott wave trader, one must always pay attention to the higher degree wave count. What do I mean? I mean that anytime you count wave on your 5 minutes, on your 3 minutes, I understand that that's just a wave count on that 5 minutes. It's a 5-minute wave count. You count wave on a monthly chart, it's a monthly chart wave count. But that is not the only wave count that exists. There are higher degree wave count. If you are stuck on that particular time frame alone, you can make a mistake. You will interpret the price wrongly. You will think that that's it. That's the end of the correction, but it's not. or that's the end of the third wave, but it's not. Or you see that, okay, the fifth wave is completed here, that's it, that's the end of the trend. A bigger correction is underway. But that's not. Your wave count, as we have done it on the monthly chart, is a monthly chart wave count. So when trader asks me, count wave on a 5 minute, count wave on the daily chart, count wave on the hourly time frame, you need to understand clearly that it's just a wave count for that time frame. If you stop there, as a lot of traders are doing on a daily chart, on a weekly chart, and they stop there, they don't want to know the higher degree will come, they are seeing only part of the picture. In order to become more intelligent area way trader, anytime you come wave on another time frame, understand that there is a bigger cycle somewhere along the line. There are multiple cycles. So in fact, when we say a lower degree, a higher degree, apart from that higher degree, there's another higher degree. Apart from that highest degree, there's another highest of highest degree. The wave count is infinite. As long as the price going up or down, if there is a bigger cycle, at one point that bigger cycle will take place. That's why sometimes traders get into trouble. They think that there's a bullish breakout, all right? And they say that a new trend has begun. You see now the S&P 500 or blah, blah, blah has formed a new high. It's going to go up. Only to notice that, all right, there is a gigantic flat correction that is underway. Always pay attention to the higher degree wave count. So for the enough of my blah blah blah. So the electronic how we count on a monthly chart. Let's go now to a higher degree wave count and see where are we now. If we stop here, that's it. We are only seeing a portion of the action. So now pushing our curiosity to the higher degree level on the yearly chart. That's the highest time frame I can see. I hope you can see 10 years time frame if this stock has been around. All right. So now this is the yearly chart. What do we see? Without too much blah blah blah. On a higher degree, this is the first wave of a higher degree. And this is the second wave of the higher degree. We are now in the third area wave of a higher degree. That third area wave has exceeded the 161.8% Fibonacci extension level of that first wave of a higher degree. So we have an extended third area wave of a higher degree underway for this stock, the electronic art, one of my favorite stocks. So now we see now that in the bigger picture, those 1, 2, 3, 4, 5 waves that we counted on the monthly chart are just the third wave of a higher degree. So as we have done it on the monthly chart, the area of mastering the theory first, we will do exactly the same thing here. All right, hold on please, I want to remove some lines so we don't have too many lines on my chart. Hold on please, traders. All right, going back again to the yearly chart, applying the higher degree to become a more intelligent area of a trader, we can see that the second wave of a higher degree went down to the 78%. Can you see 78% Fibonacci retracement on the first wave? It's a deep retracement for the second wave. It's okay. So normally, when we see a deep retracement for the second wave, we will expect a normal third area wave. All right, but this third wave has been extended. How do we know? Well, we know by applying the Fibonacci extension to the first wave of a higher degree. So now you can see that I'm behaving like a more intelligent area wave trader. As I mentioned in the first part of this tutorial, I'm combining the Fibonacci retracement, Fibonacci extension with my area wave. You see now? So we apply Fibonacci extension to the first wave and we highlight the 161.8% Fibonacci retracement. That's the pink line here. You see the dotted line above that pink line. That's the 161.8%. If I move that line a bit, you can see 161.8% Fibonacci retracement. It breaks above it, so we have an extended third area wave of a higher degree. So now we are looking at a bigger picture. All right? We know that the third area wave, all right, can go up to 314% Fibonacci extension level of the first wave. But most bullish stock will stop at which level? At 261.8% Fibonacci extension level of the first wave during the third wave. Repeat, most bullish stock very often will stop at the 261.8% Fibonacci extension level of the first wave. It's not guaranteed, it's not always the case, but this is just an observation. Some stock can push it all the way to 314% Fibonacci extension level of the first wave. But as we are expecting the fifth wave to be extended on the monthly chart, as we've seen it, we are expecting the fifth minor wave of the fifth wave on the monthly chart. Our third wave of a higher degree has more chance to come near the 200% level, the 200% Fibonacci extension level. All right. And now, if you push it more, we can bring it to the median line between the 200. All right. If you push it more, let's say you push it to 238.2% level. So all we can say to traders, watch the level of 238.2%, 261.8%, and the median line between the 200 and the 238.2% Fibonacci extension level. So $134 zone, $147 zone, $161 zone. All right. So we are now in the third area wave of a higher degree, and when a correction is underway on the monthly chart, is not so. What the point I'm making here, becoming a more intelligent area wave trader that is using a higher degree, if you are stuck only on a monthly chart and that the fifth area wave is completed, all right, you will be thinking that we're going to have a bigger correction. Yes or no? You're going to expect a deeper correction like a zigzag and so on because you are on a monthly chart. That's why you see 1, 2, 3, 4, 5, 1, 2, 3, 5, fifth wave, etc. Telling everybody the market is going to reverse, the market is going to reverse, everybody should sell, everybody should sell. But people will say to you, no, it's not finished yet, because if you go on the yearly chart, we are in a third wave of a higher degree. What you are talking about as a correction, everybody should sell and forget. It's not that. It's just a fourth wave of a higher degree that we are expecting. So there will market analysts that will expect a kind of pullback, but the market will continue to go up more. And you say to people now, people shouldn't buy on the pullback. But the market analysts will be saying, or if you pull back to X level, to $110 zone, or you pull back to $88 zone, people should buy more because a bigger cycle is not yet completed. We are expecting the fifth wave of a higher degree. All right. So in order to become a more intelligent area wave trader, one must always pay attention to the higher degree wave count. So you are counting your wave on a 5-minute time frame. You count it. Do me a favor. Check the 2-hour time frame. What's happening there? What is the bigger cycle on the 2-hour time frame? You're counting your waves on the hourly time frame. All right. See it. Everything looks nice. Check the higher degree wave count on a daily chart. Counting your wave on a daily chart. Everything looks beautiful. You apply your area wave theory without cutting corners. Check the higher degree on a monthly chart if you are counting your wave on a daily chart. If you are counting your wave on a monthly chart, as we are doing for electronic art, do me a favor, check the bigger picture on the yearly chart. If you are counting your waves on the 2-hour time frame or 4-hour time frame, check the higher degree wave count on the weekly chart. Counting your waves on a weekly chart, do me a favor, check the higher degree wave count on a quarterly chart. By doing so, you'll have a bit of idea what is happening. So you may say to me, Joel, so all I need if I'm on a weekly chart, I just need to check the quarterly chart. That's wrong. Nothing should stop you, though I say you're on a weekly chart, check the quarterly chart. nothing should stop you to go even to the yearly chart to see the bigger picture. So I say, all right, if you continue your way on the hourly time frame, check the daily chart. Nothing should stop you to go even to the yearly chart to see the bigger picture. Though you on the hourly time frame, you can use the daily chart to validate your hourly time frame wave count. Nothing should stop you if you can see the yearly chart to go and see the bigger picture. So in order to become a more intelligent area wave trader, part two is about being very curious. If uh, your trading software allow you to see the 10-year chart or 20-year chart, be more intelligent and be curious and check that a higher time frame, a higher degree will come. One thing you should take away from this tutorial is that whenever you say that a cycle is completed or a multi-wave is completed, that multi-wave can only be a minor multi-wave of a higher degree. And when you say that a cycle is completed or a correction is beginning, that correction may be a minor correction of a bigger correction. All right? So it's all adding together. It's about the fractal structure of the area wave. The area wave is fractal. The cycle is infinite to a certain degree. All right, price does not go up forever, but to a certain degree, you want to know the bigger picture, and this will help you to validate the lower degree wave count. This is the end of the tutorial. It's very, very essential tutorial, and if you start putting it into use, you start making better decisions. Though we use a higher time frame to validate our wave count, we can also go to the lower time frame sometime to validate our wave count, trying to see the internal wave. So always stay in the middle. You're on a monthly chart. You want to see if everything adding well, you go to the higher time frame, higher degree. You want to see the internal wave, everything adding correctly, you don't call impulse wave or call corrective wave impulse wave, you go to the lower time frame. Have any question or suggestion, this is your time to put in the comment section. In due course, I will be recording another video to answer your specific question. If you find this video truly useful, let us know by giving us the thumbs up. If you think that is another blah blah blah, let us know by giving us the thumb down. If you think this is an essential tutorial, feel free to share with your friend on Google+, on Twitter, and also on Facebook. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about how to become an intelligent area wave trader, part 2. I will be recording part 3 and we will go a little bit deeper talking about how to become an intelligent area wave trader, part 3. Happy trading to you all and speak to you soon.